Good day to Dr. Emma. My name is Christy Sukawai. Today, I'll be sharing insights on five investment funds. Firstly, the Public Growth Fund, which focuses on long term equity growth with up to 30% in foreign equities. Over the past year, it delivered a 13.62% annualized return and is considered as a moderate risk fund with balanced returns and fluctuations. Second, the Maybank Global Sustainable Equity I Fund is a Sharia compliant fund investing in ESG sectors like technology and renewable energy. As of March 2024, it achieved a 3 year annualized return of 9.23% and is considered high risk due to significant price variability. Next, the principal Next G Connectivity Fund targets growth in technology sectors like the AI and semiconductors. After a sharp loss in 2022, it rebounded with a strong 26.53 return in 2024, reflecting high risk but resilient performance. Next, the RHB Equity Trust Fund focuses on medium to long term growth, primarily in Asia ex Japan markets. Recently, it faced a negative 7.79% of return, with moderate risk and noticeable fluctuations in value. Lastly, the Affin Huang Select Income Fund combines fixed income instruments with high dividend yield stocks. It offers stable income with a 5 year annualized return of 1.3%, making it a moderate risk and a steady option. That's all from me. Thank you.
Good day to Dr. Emma. My name is Saxin Yue. So now I'll be sharing regarding comparison between unit trust performance analysis. So first thing is the annualized total return. The lowest annualized returns goes to RHB Equity Trust Fund, in which it is negative 7.79%. And next, the highest annualized return goes to Maybank Global Sustainable Equity-I, which is 9.23%. So in terms of benchmark comparisons, out of these 5 unit trusts, it showed that only Public Growth Fund performance, which is 5.89%, is better than their benchmark 2.92%. On the other hand, for RHB Equity Trust Fund, they underperformed significantly, where its benchmark in 3 years period of annualized return is negative 2.60%, but it only obtained negative 4.93%. So furthermore, volatility, the highest volatility goes to Public Growth Funds. It obtained 13.92% return in the year 2024, but obtained 2.06% return in the year 2023, where Affin Huang Select Income Fund has the lowest volatility factor, which is 5.5. So lastly, in markets, it is expected that the principal Next G Connectivity Fund will be in a strong position to thrive. Next, it is expected that the Maybank Global Sustainable Equity-I Fund and the principal Next G Connectivity Fund will be affected in bear markets. So that's all from me. Thank you very much.
Hey Dr. Emma, my name is Choi Shin Ling. I will be explaining the diversification strategy for each unit trust. The Public Growth Fund invests in equities, large cap stocks, and growth-oriented companies that are expected to have a long-term capital appreciation. Its investment mainly located in Malaysia, but also in regional and global equities. It invests in sectors with high growth potential like financial services and technology. Maybank Global Sustainable Equity I Fund invests in Sharia-compliant equities, Islamic money market instruments, and sustainable and ESG-driven companies. It invests in various countries like United States and focuses sectors that align with sustainable or ESG principles. The principal Next G Connectivity Fund invests in companies that are involved in next generation connectivity and technology related. It has significant investment in North America, Europe, and Asia due to the major technological advancement. It invests in sectors like information technology and telecommunication. The RHB Equity Trust Fund target invests in stocks with high growth potential over a medium to long-term period. It invests in developed markets like United States and emerging markets like China. This fund diversified across various sectors like financial, industrial, and consumer goods. The Affin Huang Select Income Fund allocates assets to fixed income instruments and equities to generate income. It invests in both local and international markets. International markets involving United States and China. Sectors like utilities and telecommunications that could provide stable income will be their choice. That's all from me. Thank you.
Good day, Dr. Emma. My name is Stephanie Ho Jiaxian. Today, I will compare the diversification strategy of 5 unit trusts based on their asset allocation, geographical focus, and also sector diversification. First, let's talk about asset allocation. The Public Growth Fund, RHB Equity Trust Fund, and so Principal Next G Connectivity Fund emphasize on equity investment, targeting for high return while accepting higher volatility. These are all considered as equity-heavy funds. On the other hand, for Affin Hwang Select Income Fund, balance its portfolio with fixed income instrument and also dividend-paying equities, ensuring for steady income stream and low risk. While for Maybank Global Sustainable Equity I Fund, follows a specialized strategy by combining equity growth with ethical and sustainable investment, catering to ESG-conscious investor. Next, we go on to geographical diversification. The Maybank Global Sustainable Equity I Fund and Principal Next G Connectivity Fund offers the broadest global reach, tapping into multiple markets and sector. While this diversification brings larger opportunity, but it also exposes investors to foreign economic volatility. Conversely, the Public Growth Fund and Affin Hwang Select Income Fund focus primarily on Malaysia, benefiting from local growth but also facing on higher concentration risk if the domestic economy fail. While for RHB Equity Trust Fund takes a hybrid approach, balancing investment in both local and also international market. Lastly, in terms of sector diversification, the Public Growth Fund and RHB Equity Trust Fund diversify across sectors like financial, technology, and also consumer goods. While for Principal Next G Connectivity Fund focuses on technology and connectivity, and Maybank Global Sustainable Equity I Fund prioritize ESG-aligned sectors. Meanwhile, for Affin Hwang Select Income Fund targets stable sector like utilities and rates, ensuring consistent income but limiting growth potential. So in summary, for Public Growth Fund and RHB Equity Trust Fund aim for long-term growth with balanced risk. Maybank Global Sustainable Equity I Fund and Principal Next G Connectivity Fund emphasize on global opportunity with sectoral focus. For Affin Hwang Select Income Fund prioritize on stability and regular income.
Good day, Dr. Emma. I'm Chang Kai-sin, and I will be presenting the impact and benefits of diversification in unit trust. Let's begin with the role of diversification in reducing risks. Diversification spreads investment across different asset classes, sectors, and geographies. This reduces non-systematic risks such as company-specific events. For example, the Public Growth Fund balances equities and bonds to achieve a stable risk-return ratio. And similarly, the RHB Equity Trust Fund offers regional diversification, protecting investors against country-specific downturns. And these features make unit trust a safer option for investors seeking effective risk mitigation. Now, let's move into the impact of diversification. First, it enhances stability by spreading risks across industries and regions, as shown by the Affin Hwang Select Income Fund, which provides consistent income during volatile markets. And second, it improves performance by exposing investors to higher growth sectors like the Maybank Global Sustainable Equity I Fund, which focuses on ESG and IT sectors. And finally, it reduces risks by mitigating company-specific and country-specific downturns, as demonstrated by the Principal Next G Connectivity Fund. Finally, let's compare unit trusts with direct investments. Unit trusts reduce exposure to individual stock volatility and offer broad diversification, ensuring consistent returns and greater stability. They also provide an accessible and lower-cost investment avenue. On the other hand, direct investments require significant capital and expertise. They carry higher risks as they are more susceptible to individual stock volatility and lack the built-in risk mitigation of unit trust. That's all from me. Thank you.